We detected an unusual trade worth $6.3 million on Meta stock, ticker symbol META. Meta, as you know, is the company behind Facebook. But here's what makes this trade even more interesting. Meta is set to report earnings on July 30th. And so in this video, we'll break down this unusual options activity to figure out whether this wealthy investor is going bullish and buying, expecting the stock to move higher, or bearish and selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, including potential access to earnings data before it's public, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual options activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trades happened on July 28th at around 11:43 a.m. at the 30-second mark for the August 15th options, at the 7:20 strike calls, and the November 21 options at the 780 strike calls. Now, based on our deep analysis of the data, this wealthy investor was closing out of these 720 strike calls that expire August 15th and then rolled into new trades with a later expiration date and a higher strike price. This means that these November 21st options at these 780 strike calls are the new open trades. 500 contracts were being traded for these options at around the price of 31.88 per contract. Since options prices are shown here and each options contract controls 100 shares of stock, to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each contract costs $3,188. So to calculate the total cost this wealthy investor spent, we multiply the price per contract by the total number of contracts traded. And so, how many contracts did they trade? Because it was not only 500 contracts. So, let's check the historical data from July 28th when this unusual option activity happened. Looking at the November 21st options at the 780 strike calls, notice how the volume of contracts spiked up, reaching 2,000 contracts. That's significantly higher than the existing open interest of just 180 open contracts, which tells us these were new contracts being opened, not existing ones being closed. And now that the data has updated, let's examine the option chain for these same November 21st options at the 780 strike calls. And we can see that the open interest has now increased significantly to 2,000 open contracts, clearly showing strong interest in these options. So this tells us that this wealthy investor opened new contracts here on July 28th. And so to calculate the cost of this unusual trade, we multiply the total number of contracts, 2,000, by the price we saw earlier on the options time and sales tape of $3,188 per contract. And this equals a total cost of approximately $6.3 million for this unusual option activity. But keep in mind, the earnings report is being released soon, so this is a higher risk trade in comparison to the trades that we share on our website. And so, if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website where you can see in real time when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here, we also bought these 780 strike call options and got into the same position marked as POS, which stands for our position, and the green color indicates a buy position. Because based on our deep research across multiple variables and data sets, this wealthy investor bought these 780 strike calls for $3,188 each. But keep in mind, they rolled their previous position to lock in profits to manage risk ahead of the upcoming earnings report. And so, when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable, because it's going long, bullish on Meta stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short, bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break-even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $780, the stock needs to trade above $812 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, including earnings, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here, where you can also learn more strategies to increase your profits. Let us know in the comments, do you think Meta stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.